Advaryu. With me is Kanishka Sarkar joining us from our Delhi studio, and this is a show where we take you through all the developments that we are getting from global markets overnight and which are the stocks that you need to keep an eye out on for trade today. But Kanishka, let's get started with how US markets fared yesterday, and most of the major indices ended in the green, isn't it?
Absolutely, Ashisha. Very good morning to you, first of all. Now, those US stocks have been extending their rally overnight, with the Dow jumping nearly 464 points or 1.04%. The S&P 500, that rose 0.3%, and the Nasdaq, the tech-heavy Nasdaq index, that also edged up about 0.1%. Both these indexes, that is S&P 500 and Nasdaq, they hit fresh record highs for the second straight day in a row. Now, tech was, of course, in focus, with AMD climbing nearly 5.5% and Apple up more than 1.5%, whereas Paramount Dimes shares, they jumped nearly 37%. Now remember, these gains followed Tuesday's softer than expected inflation print, which is markets pricing in almost certain Fed rate cut in September. Small caps, they outperformed as the Russell 2000 rose 2%, benefiting from lower rate expectations. Now next up, that is today, traders will watch for US producer price index data for wholesale inflation, followed by key signals from Fed's Jackson Hole meet later this month. So those are the cues that we are watching for the US markets later today.
So that's as far as American markets are concerned, but let's also put the spotlight on the commodity market then. And Brent crude has snapped its two-day losing streak today. It has started with gains of nearly 0.4% as we speak, to trade near that $66 per barrel mark. Now remember, we had an International Energy Agency report, monthly report, that they came out with yesterday, and they've spoken about rising supply going forward. In fact, IEA says they're warning of record supply next year. IEA also goes ahead on record and says that global oil inventories will accumulate at a faster rate than what we saw in 2020 COVID year. So that's some commentary with respect to demand and supply going forward. But remember, all eyes will be on that all-important meeting between US President Donald Trump and Russian President Vladimir Putin, and any kind of talks about peace deal between Russia and Ukraine will be crucial, because that will mean higher Russian oil supply in the global market, which could push global oil prices lower. But let's also put the spotlight on the yellow metal market then. Spot gold is gaining for the third consecutive day today. It is up nearly 0.5% in trade today to trade near that $3,370 per ounce mark. Remember, US Treasury Secretary Scott Bessent yesterday made some commentary where he again urged the Federal Reserve to go ahead and cut rates in the meeting that is scheduled to happen in September. So bets of rate cut have again risen in the global market by the Federal Reserve, and that is precisely the reason we are seeing that spike up coming in the gold prices. Remember, lower yielding assets like gold benefit when rates come down because they are practically non-yielding, and hence we have seen that spike up coming up 0.4% today. $3,370 per ounce is where the gold is trading currently.
Absolutely. So that's how the commodity markets are shaping up this morning. But let's also put the spotlight on how Indian markets fared yesterday. Now, the Indian equity market bounced back in yesterday's session, reclaiming some of Tuesday's losses and ending the session near the day's high as investors found renewed buying interest across sectors. Now let's go to Snehi to get a roundup of all the market action yesterday.
Well, yes, we've seen a very good day of trade coming in for our markets yesterday. Nifty closed around the 24,620 level. We were very close to 24,650, but albeit we've closed slightly lower. But nonetheless, it was a very good day because we've seen an uptick of 0.6% coming in for the Nifty 50 yesterday. Sensex too up 0.5%. It was the Nifty Bank that was slightly underperforming, but has closed with gains of 0.3%, and the broader markets also slightly outperformed the benchmarks yesterday. So all in all, good show coming in across the board from the market yesterday. It was select names like Apollo Hospitals that closed with gains of more than 8% on the back of strong Q1 and upbeat commentary coming in from the management. Brokerage is also positive on the stock. Hindalco continued to gain for a second straight day, 5% uptick on that stock. Cipla, Dr. Reddy's, Hero Moto, Eternal, BEL, all of them looked good. select handful of stocks that added pressure to the Nifty yesterday. The likes of IndusInd Bank on the back of Nifty now exclusive, Adani Ports, ITC, Titan, Tech Mahindra. These were some of the stocks that were trading nominally lower. Sectorally, if you see, only the FMCG, slight pressure coming in on IT and very nominal cut on PSU banks. These were some of the sectors that were absolutely flat with a hint of a negative bias. Other than these, everything else has been in the green with strong moves coming in from Nifty Pharma, about a 2% uptick in yesterday's trade alone, with names like Alchem Labs, Loris Labs, Zydus Life, Dr. Reddy, Cipla, Lupin, all of these stocks doing very well for themselves yesterday. Following that, you had Nifty Metal, Auto, Media, Realty, Bank and Energy. Energy on the flat line with a slight positive bias, but other than that, all these sectors have done exceptionally well in yesterday's trading session. You had some pressure coming in on the PSU banks like Maharashtra Bank, UCO Bank, Central Bank, Canara Bank and Bank of Baroda. They were all trading with very nominal cuts in yesterday's trading session. The spotlight was on some of these new age tech companies, or new age companies rather, the likes of Paytm, Honasa Consumer, Nykaa. All of them were up and away in yesterday's trading session. Given that we have a truncated week with holiday on Friday and the market expiry today, all eyes are going to be on what are the levels that we can see on the market today. So watch out very closely for that.
Well, yes, and we hope that yesterday's momentum continues in today's trade. Snehi, thanks so much for joining us with all those details. But we now have Khoon Go, Head of Asia Research at ANZ, now joining us. Mr. Go, thank you so much for taking your time out and joining us here on ET Now. All eyes are on that all-important meeting tomorrow, and yesterday again we have some commentary that has come in from Trump, where he says that Russia will face severe consequences if Putin does not stop the war. How do you read these developments, and what does this mean for global markets over the next few months?
Good day to you. Look, I think financial market expectations are pretty low heading into this summit between President Trump and President Putin. I don't think anyone is expecting any major breakthrough. And I think herein lies the potential surprise for markets. If by some stroke of genius or luck, we do come to some kind of positive outcome from the meeting that could, permanently end the war, that will be taken as a huge positive surprise for markets. I think it's going to see a risk rally. It will be especially positive for the euro currency in particular. For oil, probably less so. As you indicated earlier, the potential for any ceasefire, which could see sanctions being eased off on Russia, could see increased supply into the oil market at a time when OPEC has been increasing their supply. You still have increased supply from the US. So all those bode for potentially further downside for crude oil.
That's right. So that's the view. Hi, Mr. Go. This is Kanishka also joining in. I wanted to understand, you did say that the expectations are very low when it comes to the meeting that Trump and Putin are going to have yesterday. But with respect to India, what are you expecting? Could we have any developments, coming in on India, given that India continues to buy Russian oil, and that's the reason why Trump has, imposed additional duties on India. So do you think anywhere on the priority list, India is going to be there when the discussions happen tomorrow?
In my view, I think India was just unfortunate in being caught up in this wider geopolitical situation. So if you like, India was just collateral damage with the tariff penalty being imposed on India. I think trying to send a strong message to Russia. There's still hope and expectation that eventually India could see the tariff penalty getting unwound and hopefully come to some kind of an agreement with the US over a trade agreement that will bring the tariff level back down towards levels that are in the 15 to 20% range, which other Asian countries are facing. Again, this is highly uncertain, of course. A lot of that will hinge on how tomorrow's summit goes. And then following that, again, also depending on how much India can offer in terms of further concessions in any trade negotiations with the US.
Is caught up in that collateral damage that we are facing. But Mr. Go, since we are talking about India, I also wanted your thoughts on Indian equities and broadly within Asia, any other emerging market that you're bullish on, if not India?
Generally, Asian markets have been buoyed by these increased expectations of Fed rate cuts. We are in a situation now where the tariff-related noise has gone away now that everyone knows where they stand in terms of the tariff landscape. So that has ceased being a major driver of markets. And now we're shifting to more conventional type of market setting where Fed expectations and the data is playing an important part. And there's no doubt that the Fed will be cutting rates in September. The increasing question now is, could they potentially go with a 50 basis point cut? If you see the market start to move more into that kind of pricing, I think that will be further supportive, particularly for risk assets and equities, and definitely here in Asia. In the case of India, and again, any potential for the penalty tariffs to be lowered in the coming weeks or months could be another catalyst that could buoy Indian equities, although valuations continue to remain a challenge. So I think we'll probably see other emerging Asia risk assets probably at this stage performing better.
Okay. But Mr. Goh, another question on Asian markets. I wanted to understand now that US has extended that tariff truce deadline for China by another 90 days. As and when it happens, one, what is your expectation when it comes to tariffs on China? And secondly, how do you expect other Asian economies to react to that? What kind of rate is China expected to get, that given India is getting 50% already? So how do you expect other economies to react?
Well, the trade negotiations with China will continue. I doubt very much that China's current tariff rate of 30% can go too much lower from here. I think the negotiations will center on other strategic important matters, such as the US being able to continue to secure supply of rare earths, for example, and in China's case, being able to continue to access certain key technologies from the US, particularly on semiconductors. And on that front, already the US has relented somewhat. The broader question is whether or not there's going to be any negotiations over exchange rates. I think that's crucially important as well. If there is some kind of a deal can be struck, which China agrees to allow their yuan to appreciate further, that definitely could have further repercussions across Asia. In terms of what that means for the rest of the Asian economies, as I said, I don't think the tariffs on China will be materially lower than 30%. Therefore, there's still a tariff advantage, if you like, for other parts of Asia, particularly Southeast Asia, that will see supply chains continue to shift towards Southeast Asia. And again, with India, it remains to be seen whether or not India can eventually negotiate a much lower rate. For now, that 50% tariff level is quite punitive. So any company's expectations of shifting to India will probably be on hold for now.
Right, understand. We understand that point. Mr. Goh, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the global macro setup is looking like ahead of that all-important meeting tomorrow. Thanks so much for joining us today. But everyone expects the momentum of yesterday's trade to continue today as well. But what is the market setup looking like? To explain exactly that, Sharad is now joining us with more. Sharad, morning.
2 days of short covering has aided markets to come in at comfortable levels, but FIs have been selling for the last 3 trading sessions. Today is the Nifty weekly expiry in a truncated week because of Independence Day holiday, and overall the FNO setup still looks very comfortable. India wicks at around 12 levels, and PCR changes are also still comfortably for both Nifty and Nifty Bank. Looking at Nifty, the activity is at short covering, and the most important highest open interest strike price for the weekly expiry. For put, it's 24,500 and 24,600 levels. For call, it is at 25,000. For Nifty Bank, the position is long build up happening, and the highest open interest strike price, put and call, both of them coming in at 57,000 odd levels. FI long positioning, not much change. Yesterday it was 92 odd % shorts in the system. Now it is at 91%. That means the short covering rally is still pending when it comes to the FIs, and it's likely that a major event on August 15 can actually trigger something in the next trading session. It's advisable to trade light as a lot of news flows will be coming in over the long weekend. DI long positioning, that has still remained stable, and that's roughly coming in at almost 70%.
All right, so that's how the F&O setup is looking. But Sharat, stay on as we can discuss now all the stocks that we should be keeping on our radar today. And for that, we are also now joined by Ravinder, who's standing by with a list of stocks that we should be eyeing out for. Ravinder, let's start with you. Which are the stocks on your list?
In focus, where bank has reversed the steep minimum average balance hike after the feedback, and minimum balance requirement for urban and metro area is at rupees 15,000, which is down from rupees 50,000. And for semi-urban areas, ICICI Bank has minimum balance in saving account has been revised to 7,500. And for rural areas, the minimum monthly balance of ICICI Bank is 2,500. So back of this, ICICI Bank is in focus. Apart from this, ABFRL can be focused on the back of the quarterly earning, where companies' revenue saw an uptick of 9.5% year-on-year basis at 1,831 crore, and the company's loss has increased from 161 crore to 212 crore because of the higher depreciation. And if we talk about EBITDA, then company's EBITDA saw an uptick of approximately 25% year-on-year basis. So back of the mixed set of number in Q1, ABFRL can be in focus. And lastly, United Spirit can be in the focus on the back of their quarterly earning, where the company's overall volume grew by 9.4% year-on-year basis, which is above the street estimate, and net revenue saw an uptick of approx 10% year-on-year basis at 3,021 crore. And if we talk about EBITDA, company's EBITDA saw a downtick of more than 9.5% year-on-year basis, and margin also saw a downtick of more than 450 basis point year-on-year basis. So back of the mixed Q1 number, United Spirit can be in focus.
Stocks in focus based on earnings, but Sharat, you tell us which stocks do you have on your radar today morning?
Deepak Nitrite came out with its weak set of numbers, and this is the second straight quarter where weak numbers have been reported. Of course, the margins have also been under pressure, and interestingly, the company has lagged behind its peers in this first quarter performance. BPCL, a strong Q1 numbers coming in, and also an important trigger for the stock is that how will the LPG subsidy be played out over the entire year, and how do they start getting the receipt payments? And of course, there will be a significant up move in their EBITDA in the coming quarters as well. Our revenue jumped in 2% sequentially, but PAT numbers, that has jumped almost 90% on a sequential basis. Margins also saw an uptick of 134 basis points. Muthoot Finance, strong Q1 numbers. Interestingly, the AUM growth has been very strong, and almost 88 basis points of improvement was seen for the NIMs as well on a sequential basis. Favorable OPEX and a significant decrease in credit cost aided strong numbers coming in for Muthoot Finance.
Okay, so strong numbers coming in for Muthoot Finance, but let's also put the spotlight on a few other stocks. First up, Jubilant Foodwork. That one has also reported very strong set of numbers. Like-for-like growth stood at about 11.6%. Both delivery and dine-in segment reported very strong set of numbers. Revenue has risen by about 17% YOY. PAT has seen a solid uptick of nearly 60% on a year-on-year basis. Margins have remained steady at about 19.4% versus 19.8% that the company had reported in the previous quarter. Meanwhile, we also have Brigade Enterprises. This one has also reported strong set, where real estate and leasing segment aided growth for the company. Revenue rose 19% YOY. Profit after tax saw a solid jump of nearly 80%, and we have margins at 25.3% versus 27% that the company had reported same time last year. A whole host of two-wheeler companies, the likes of, or rather three-wheeler companies, the likes of M&M, Bajaj Auto and Atul Auto, these stocks will also continue to remain in focus today. And this after Ministry of Heavy Industries has announced significant amendments to boost incentives for electric three-wheelers. So some kind of government support coming in for three-wheeler segment, and all of these counters will be in focus on the back of that. Lastly, Tata Power and Adani Green Energy will also be in focus, and this is because India has now achieved 100 gigawatt solar PV module manufacturing facility, and this is under the approved list of models and manufacturers. So some positive development coming in at India level, because of which Tata Power and Adani Green will also be in focus today.
Absolutely. Some of those solar stocks are going to be in focus. But thank you, Sharad and Ravinder, for joining us. On that note, we'll let you go. But let's also shift focus to some of the cues that we need to watch out for in today's trading session. And Snehi is now here to tell us just that.
Well, yes, lots of cues to watch out for, lots of important events and macro data to be tracking. Since it's Thursday, it's going to be the expiry day that is going to be very closely watched out for, and how the markets trade, given that on Friday all eyes are going to be on that Trump and Putin meeting, so the market may show some impact of that, given it's also the expiry. Other than that, if you take a look at some macros that we'll be tracking, the WPI data will be in focus after the CPI. The wholesale price index data will be released, so watch out for that. In terms of global macros, from the US you have PPI and initial jobless claims, from UK industrial production, but along with that the UK GDP figure will also be out, so keep a very close eye on the British economy. Other than that, from Eurozone too, the GDP figure will be out along with their industrial production. But shifting focus back home, quarter 1 earnings, then none left from the Nifty 50 group of stocks. But if you take a look at some broader market companies, then you have Amara Raja, Ashok Leyland, IOC, Borosil, National Fertilizer, Vodafone Idea. All of these companies will be reporting their earnings, so keep a close eye on them. In terms of corporate action and board meetings, the likes of Astral, Bandhan Bank, Gland Pharma, HPCL, Manappuram Finance, Mahanagar Gas, and a whole host of other stocks like NHPC, NCC, REC will be trading ex-dividend. On the AGM's front, keep a close eye on Aegis Logistics, Manappuram Finance, Amara Raja, Deepak Nitrite, AB Capital, as well as Ashok Leyland. The lock-in period will open for Jana Small Finance Bank, wherein 20% equity comes out of lock-in, so watch out for the stock reaction. And in terms of other events, all eyes are going to be on Richmond Fed President Thomas Barkley. He's going to be speaking at an event, so that speech may have some cues about where the US economy is headed, what they expect the Fed to do next. So watch out for that, and watch out for all of these other cues, all of them very important to track.
Indeed, a whole host of cues to watch out for in trade today. But on that note, we need to slip into a very short break. More news and updates will continue on the other side. Has also opened on a positive note. Shanghai is up 0.3% as we speak, and ASX 200, that one is also rather tepid. We are not seeing any major reaction over here, although it is up 0.6% as we speak. Nifty implied open though is suggesting a tepid start for the Indian market. That one is down nearly 21 points after a solid run up that we saw yesterday. 24,691 is where Nifty implied open is currently trading.
Absolutely. So a tepid start is what we are penciling in for the Indian markets. But let's shift focus to some domestic stories as well. Now, External Affairs Minister S. Jaishankar will visit Russia on August 20 and 21st to meet his counterpart Sergei Lavrov in a bid to strengthen strategic ties with Moscow. Now, this is amid rising tensions with the US, remember. Now, he may also call on President Vladimir Putin. The visit following NSA Ajit Doval's recent trip to Russia will fine-tune the agenda for Putin's India visit later this year, which is going to be his first visit in 4 years. Now, it comes soon after a Modi and Putin phone call reaffirming their special and privileged strategic partnership. Now, let's get Sumita here to get us all the details on this front.
That's right. We're given to understand from sources that External Affairs Minister Dr. S. Jaishankar could be travelling to India later this month, which is essentially between 18th till the 21st of this month. And between 19th and 20th essentially is when he will hold meetings with the members of the Russian leadership, and that also includes a possible meeting with Deputy Prime Minister of Russia, Denis Manturov. Other than that, sources are also suggesting ET now that he will of course be addressing a business forum as well, where members from both Indian business community as well as Russian business community are likely to be present. Remember, this is a significant visit. It's an important, crucial visit that's coming in, given the fact that we've seen a visit of the NSA Ajit Doval to Russia earlier this month as well, where India firmed up its ties with Russia. In fact, they talked up their ties, the strategic partnership that both the countries enjoy. Both the countries have at the moment. In fact, while visiting Russia, the NSA also met with President Putin, and he stated, and I quote, "We are very excited and delighted to learn about the visit of President Putin to India. I think the dates are almost finalized now." Commenting on the relationship between the two countries, Doval said, and I quote, "You have very rightly mentioned that we have a very special relationship, long relationship, and we highly value our strategic partnership." So, of course, he did hint about the fact, he did speak about the fact that Vladimir Putin will be visiting Russia later this year. And, of course, that followed a phone call between Prime Minister Modi and President Putin, wherein India extended an invitation for President Putin to visit India later this year for the Russia-India annual summit. Remember, this is coming in just days after Donald Trump announced elevated tariffs on India of 50%, and that precisely because India has been doing energy trade, oil trade with Russia. However, both sides have continued to maintain, Russia and India, that this is a time-tested partnership. And of course, all the decisions that will be taken by India will be in the interest of its industry and will be in national interest.
Smita, thanks so much for joining us with all those details. But let's shift focus then. And ICICI Bank has rolled back its steep hike in minimum average balance requirements following customer feedback. The minimum balance requirement for metro and urban branches now stands at 15,000 rupees, down from 50,000 that was announced earlier. Varun Dubey, my colleague, is now joining us with more details on this. Varun, morning.
Good morning. So definitely within a week of hiking the minimum balance requirement for new saving accounts, the bank has actually rolled back the minimum saving balance requirement after getting feedback from many of its customers. So the minimum saving balance requirement has been reduced from 50,000 to 15,000 for new customers in urban areas and metros, and also the minimum balance requirement has been slashed from around 25,000 to around 7,500 for customers in semi-urban areas, and also for rural areas it has been slashed from 10,000 to 2,500 rupees. Although the requirement is little bit more than what it used to be previously, but yes, it has been reduced significantly from what it has been announced a week ago. Now, if you look at this, the initial hike would have been effective from 1st August, and it would actually had an impact especially on the middle class people and customers in the rural and semi-urban areas. And many were fearing that this would actually impact the overall customers, because they would have struggled to keep the minimum requirement, and there would have been penalties which could have impacted the overall sentiments of customers. But now this move is actually seen very good by many among the street and also by the customers, because if you look at how much it will impact the overall incremental deposit, that time will tell, but this will actually help the bank to actually withstand the overall competition. Because if you look other banks like SBI, they have actually slashed the overall minimum requirement in 2020, and also other banks, they have a requirement of around 2,000 to 10,000 rupees. Although this requirement by ICICI Bank is still higher than what other banks are having, but yes, within a week, the rolling back of the excessive requirement that the company or the bank has kept is actually seen a very good move by even the analysts, and also it is a very good move for the new customers. So this will actually let's see how much it impacts the overall incremental deposit of the bank. But yes, good news for the customers of ICICI Bank.
All right. Thank you, Varun, for taking us through that latest update and the impact that it's going to have on customers. But moving on, Tata Sons is scheduled to hold its AGM today, as shareholders are expected to ratify Noel Tata's appointment as director weeks after he became chairman of Tata Trust following Ratan Tata's death. Now, the meeting will also review progress on seeking an RBI waiver from listing rules for upper layer NBFCs. This is ahead of a September 30th deadline. My colleague Anurag Joshi is now joining us with all the details.
Tata Sons, the holding company of India's biggest business group, is holding its annual general meeting on Thursday, and the shareholders of Tata Sons are set to ratify Noel Tata as the director of the firm at the meeting. The AGM is likely to assess Tata Sons' progress on seeking RBI waiver from listing norms. Noel Tata was named the chairman of Tata Trust on October 11, 2 days after the demise of Ratan Tata. Noel Tata was named a director on Tata Sons in November 2024. The AGM will also discuss options for the Shapoorji Pallonji Group to exit plan as from Tata Sons as a shareholder. The Tata Group and Shapoorji Pallonji are said to be in recent talks over the exit plan of the SP Group, which is focused on infrastructure. Media reports say that lawyer Behram Vakil of ABZ and partners and banker Uday Kotak may join Tata Sons board of directors. And according to the RBI rules, if we see the listing norms, and Tata Sons needs to list its shares by September 30. So that's the deadline. In 2022, RBI had unveiled the norms for upper layer non-banking financial companies, and Tata Sons is recognized as such by the Reserve Bank of India, and it had given a deadline of 3 years to upper layer NBFCs. The upper layer NBFCs have a tighter and higher supervision from the central bank. This is taking place even as another Tata Group company, Tata Capital, is preparing for an IPO. The trusts own about 66% equity stake in Tata Sons.
So all eyes will be on Tata Sons AGM today, but Anurag, stay on with us because an RBI appointed panel on artificial intelligence in the financial services sector has submitted its report recommending a framework for responsible and ethical use of artificial intelligence. The 8-member panel urges all regulated entities to adopt a board-approved AI policy. Tell us, what are you picking up with respect to this story?
A Reserve Bank of India appointed panel on artificial intelligence has submitted its report. The panel was set up to devise a framework for responsible and ethical enablement of AI in the financial sector. The 8-member panel was headed by an IIT Bombay professor, and the panel has recommended formulation of broad approved AI policy by regulated entities, and its other recommendations include setting shared infrastructure to democratize the access of data and compute, creation of AI innovation sandbox, development of indigenous financial sector specific AI models, formulation of AI policies to provide necessary regulatory guidance, and to mitigate the AI risks. The panel has recommended the formulation of board-approved AI policies by regulated entities, expansion of product approval processes and consumer protection frameworks, and boosting cybersecurity practices and incident reporting frameworks.
All right, thank you, Anurag, for all those details. But moving on, the centre has held a high-level meeting with industry leaders to assess the global trade scenario, especially in light of the recent US reciprocal tariffs, and to chart a strategy for the textile sector as a whole. Now, the government has stressed diversifying into markets like the EU, which imports twice as much as the US, and also leveraging India's 15 FTAs. My colleague Samir is now joining us with all the details on this front.
Important development in the textile space to review the global trade situation. Also, the higher reciprocal tariff announced by US. The textile minister Giriraj Singh chaired a very important meeting with the key stakeholders from the textile and the garment industry to find out the possible solutions to navigate the higher tariff, especially the tariff situation which is arising. And in the same direction, the government has now urged the exporters to look for the alternate markets where they can enhance the export basket. The government or the textile ministry has asked the textile players, players from the apparel and the garment sectors to look for the FTAs which has already been signed by India. So as of now, there are 15 FTAs which have been signed by India, and these 15 FTAs, they have a combined import value of somewhere around $180 billion. Not just this, the government has also asked the textile exporters to focus on the European market, the EU FTA, which alone has an import potential of $268.8 billion, which is way higher than what India exports to US. So for US market, India textile export stands roughly around $179 billion. So this is the reason that government understands that even if US imposes higher tariffs, but if the government needs or the textile player needs to mitigate this higher tariff, then they need to look for the alternate or the newer market, and export diversification is one possible solution. In addition to this, the textile minister has also directed to form subcommittees to find out what could be the steps or the policy tweakings that could be undertaken for the structural reform. So the subcommittee that has been asked to form, this will look into the aspect of the diversification in the new market. Secondly, the fiscal and ease of doing business measures, what structural reform could be done. In addition to this, the enhancing cost competitiveness and the innovation. And lastly, that government's target of US $100 billion export by year 2030. Government is quite confident that despite the global headwinds, the textile export will reach the target of $100 billion export by 2030, and the domestic industry will definitely play a very important role to achieve this.
Okay, so the textile sector will be in focus on the back of that. Thanks so much, Samir, for joining us with all those details. But government sources on fiscal support to exporters, where export promotion mission to be rolled out soon with an economic package. Sumita Karir is now joining us with more details on this. Sumita, take it away.
That's what sources are suggesting ET now. In fact, sources have told that the government is expected to soon roll out support measures under the proposed 2,250 crore export promotion mission. This is essentially to help insulate the industry from global trade uncertainties that are arising out of Trump tariffs. So, of course, that in fact will be rolled out soon is what government sources are telling us. Sources also tell us that a proposal as of now has been sent to Finance Ministry's Expenditure Finance Committee. After an approval is gotten from that Expenditure Finance Committee, essentially when this proposal will then be sent to the Cabinet for further ratification. Remember, we told our viewers just a couple of days back that there are measures currently underway by the government of India to boost domestic consumption. India is exploring markets in West Asia and Europe to cushion tariff impact for the export of labor-intensive products. In fact, India is also looking at fast-tracking some of the FTAs that we already have. For instance, with EU, that's also been a demand by exporters as well. India's Oman FTA is undergoing legal vetting as of now, and the BIT is also separately under consideration, under negotiation with Saudi Arabia. In fact, the government is also looking at possibly separate FTAs with GCC members, and there are currently talks which are underway with the Gulf Cooperation Council.
All right, thank you, Sumita, for that exclusive story. But moving on, the Supreme Court has shifted the suo motu case regarding stray dogs in Delhi NCR to a newly constituted three-judge bench, which will hear the matter today. Nivedina, my colleague, is now joining us with more details.
The Supreme Court order on stray dogs in Delhi NCR and them being sent to a shelter has created quite a stir. And remember, many animal activists were also dead against it, as well as citizens. And now CJR B.R. Gawai has referred the stray dog matter to a three-judge bench comprising Justices Vikram Nath, Sandeep Mehta and N.V. Anjaria. Remember, the matter was earlier heard by a bench of Justices J.B. Pardiwala and R. Madhavan, which on August 11th had passed sweeping directions ordering the removal of all stray dogs from public spaces in Delhi NCR. The order had also mandated the relocation to shelters. A deadline had been set. Another August 11th bench had called the situation extremely grim and stressed the need for protection, especially for children and the elderly. The court now has clubbed the current proceedings with connected matters and the pending special leave petition against a Delhi High Court ruling on stray dogs. The case is listed for further hearing today.
Nivedna, thanks so much for joining us with all those details. But on that note, we need to slip into a very short break. More stock-specific news coming up on the other.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe.
Now remember, this segment contributes nearly 88% of the total net sales value. Here, volume growth stood at 9%, and we have popular segment. This segment also reported a solid growth of about 12% YOY. So volume growth continues to remain very solid. As far as management commentary is concerned, they say it was a resilient quarter. Numbers are in line with what the street was working with. They remain focused on to the next wave of category growth through sharper portfolio, tailored customer engagement and revenue growth management. So their focus on expanding their portfolio continues. Remember, they have been focusing on expanding their prestige and above category. Their focus on premiumization continued in this quarter, and that is likely to continue going forward as well. So although on a year-on-year basis numbers look tepid, it is in line with what the street was working with. Volume growth was solid, and management commentary also continues to be on the positive side.
All right, so inline numbers coming for United Spirits. All eyes on how the stock reacts to it. But moving on, let's shift focus to some global stories as well. Now, the Trump administration's decision on pharmaceutical import tariffs is likely still weeks away, according to reports, despite earlier expectations for a sooner announcement. Now, he has also signed an executive order to fill the strategic active pharmaceutical ingredients reserve with a 6-month stockpile of critical drug components aiming to secure America's medicine supply chain. The move directs federal health officials to prioritize domestically produced APIs, where possible update the list of essential medicines and plan a second supper site with only 10% of U.S. APIs made at home. The White House says that the stockpile will reduce reliance on foreign suppliers and safeguard access to vital drugs in emergencies. Next up, Trump has warned of severe consequences if Putin refuses a peace deal in Ukraine ahead of their Friday meeting in Alaska. Now, Trump says a follow-up summit could include Zelensky after a joint call with European leaders in Kyiv. Now, the remarks aim to reassure allies concerned about any territorial concessions, as Macron insists no land swap proposals are on the table.
Yes, they will. Yeah.
What will the consequences
There will be
be?
consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences, yes. That will go rapidly, relatively inexpensively, and will make it better than it ever was.
And the U.S. administration has unveiled a nearly $1 billion funding plan to boost U.S. production of critical minerals and materials that are vital for electric vehicle batteries, semiconductors and national security. The Energy Department says the initiative will scale up mining, processing and manufacturing to reduce reliance on China and other foreign suppliers. Trump has also signed an executive order to streamline federal regulations governing commercial rocket launches. This move could benefit Elon Musk's SpaceX and other private space ventures. Remember, Trump's order directs the U.S. Transportation Secretary to eliminate or expedite environmental reviews for launch licenses that are currently being administered by the Federal Aviation Administration.
Shifting focus to some macro news then, and a Goldman Sachs expects U.S. Fed to deliver 325 basis point interest rate cuts this year and 2 more in 2026, which would put the terminal rate between 3% and 3.2%. Down from the current 4.25% to 4.5% level. Now remember, the Goldman Sachs note followed data showing that U.S. consumer prices increased marginally in July, rising just about 0.2% last month after a gain of 0.3% in June, in line with economists' expectations. Next up, Brazil has rolled out a $5.5 billion credit line to help exporters hit by steep U.S. tariffs, which President Trump raised to 50% on key goods like coffee, beef and seafood. President Lula says Brazil won't retaliate for now, focusing instead on shoring up affected sectors and keeping trade channels open.
Meanwhile, Tencent's quarterly revenue surged by 15%, powered by blockbuster gaming titles like Delta Force and Honor of Kings, plus a sharp boost from AI-driven ad and social media upgrades. The CEO said that the company is reaping benefits from its AI bets while keeping growth in double digits. And that's all the time we have on this edition of the show, but don't go anywhere. The market coming up next.
when the stakes are high and the answers are elusive. There's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not about left or right. It's about what's right for India. It's about holding the powerful accountable.
India Up Front with Pranesh Roy, weeknight.